you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. Well, it looks like we had that rejection off of the 1 level of this bearish trend-based fib extension all the way down to the 382 of the diagonal pitch fan level. This is why we've had this diagonal pitch fan level intact since January 16th, I believe it was. Yeah, it was around that time when we started to see these consolidation bounces off this diagonal level of the rise retrace idea of the pitch fan. And check it out, the daily candle close looks like it closed right off of that 382 level. So are we going to break down and start our path down into the 1618 Hail Mary play of the bearish trend-based fib extension level, or are we going to start to see some sort of retracement bounce out of here back to the 0.5 equilibrium of this pitch fan on the Coinbase chart here? Let's go into the high block capital heat map. What is the heat map? Well, that's when people lock their liquidity in the charts to get burnt to a crisp for not using a stop loss, and we get to see where those crispy carcasses lie in wait, and we bid them farewell. So last night we saw a rise to the upside. We pointed it out in the Discord over in Momentum Master and over here as well. We were talking about them pinging some shorts as they dropped down here. There was more shorts than longs, and we said they pinged some juicy shorts here, and they came up with a fury to grab them, and then they immediately dropped down and came back up again, as we see here. Let's take a look. So they came up into this region. They have yet to reclaim this 26383 region, which is also stacked up nicely with this character who joined as they dropped down here. But they came back and gobbled up all the 100x and 50x longs and left this character on the table.
Fatality. Yes, there.
They play them like a piano and played both sides here as they gobbled it up. All right, so are they going to go down here and grab this 77 million in at 25,656? I would be surprised if they did not. The character is currently underwater based on where they opened it here at this 25,799 level, and so they're currently heading in that direction for the 100x pool. But thereafter, you have a 50x pool still on the table up here on the shorts at 25,934, and their partner in crime at 26,443 with this guy from the previous rise up here. So they can come back for this 77 million and then peel out to these guys up here. That's kind of what I'm seeing on this time frame. It's also stacked in confluence with this 100x pool over here, or the 50x pool of 138 million up here at 26,445. So we could completely inverse Bart Simpson our way out of here and start our path back into this region. We are currently imbalanced on the 1 minute time frame to $7.5 billion in short liquidity. Let's expand our vision to the higher time frame to see where the pools lie and in wait. If you're already adjusted to that, you know where these things lie. We grabbed this little bit of happiness to the downside here, and currently on the 7-day time frame you are imbalanced in short liquidity up above in the 28k region. That doesn't mean much when you start to shift your vision to the higher time frame in the external liquidity pools, because then you see there is still a lot more below in double digits at 24.5 and 24.2 in this region. Leading to that on the monthly time frame suggests you could come lower. If you go to the 3-month time frame, this also is the case. We have that, looks like we cleared that 25.2 with that capitulation wick. Maybe it caused them to close the position, so that $64 billion is off the table here on the 3-month time frame. So did that spawn enough divergence on that wick push down to get us out of here? That is the question. Or are we going to continue lower down into the 22.4 region? This entire region is caked up quite nicely with yellow hot liquidity. If we go to the 6-month time frame, we also see that it is yellow hot down to 24.3 with $102 billion down there, and 22.5 has 109 billion. So the imbalance on the 3-month and the 6-month is to the downside if we are to continue in that manner. 24.3 does look juicy in the 6-month time frame. If we go to the yearly, it's not going to look as hot as it used to in the past on the upside path, because we are losing the range from the previous year. So I will not be using the yearly time frame anymore. I'll be using the 2-year. Thankfully it has it. And here you can see where the pools lie. We have $159 billion at 32.4, 186 at 32 even, 104 at 31.6, and 83 billion at 30,000 even. Just below us we have 128 at 24.8, 148 at 24.4. So we could easily go down and stop out these characters, and for some reason it tapers at 24 even to $41 billion. So at some point in the game, are these imbalances to the downside going to shift to the upside? That is one narrative that could play out. If you look at this just solely off of what lurks above, you do have a lot of pools up here into the 34 4-8 region on the 2-year time frame. If you look down below, you also have the nice pools down below, but at some point they have to allow these pools to continue to stay open. But let's go into the monthly and head into the charts. So as it stands right here, this is your area of interest down below this range. Let's see if we can hold and maintain, or we're heading down into this region. Binance chart. So despite what I was calling for the other day, which was a potential upside play which did not play out, the indicators that we had you at hello, as did the bearish trend base fib level. What is the bearish trend base fib level? Well, I'll show you in how to get that in a minute here. So this impulse to the downside and this retrace to the upside projects out. I'll show you, it projects out this math, and this retrace to this wick to the upside was as high as we went on this impulse retrace idea, this AB pattern, and the C would take you down into these regions just after consolidating, and you got a rejection not once but twice on this 236, which is your entry idea for a short. We said if you cannot maintain this 236 of the bullish trend base fib level, which was this impulse and retrace here, if you cannot maintain this 236, then it is a short. And sure enough, we dropped out of that 236 with a hard rejection down into this 1382 region. And this is why the math has you at hello at the 25,540 region. Multiple times we've been chilling out here and returning to these fib levels like the 786 on this bearish trend base fib. So this impulse retrace contains the path of where it wants to go in the future. This is why I use these concepts and why they are interesting to note. So we can remove the bullish one because it is done. We'll come to that bridge when we get there. So that is where we are. And then we have the larger time frame one, which we've had out for since April really. And that one is up here. So this one we had this impulse to the downside with a retrace to the upside here on April 26th, and this had your 236 entry at 29,235, and we saw that hard rejection on an hourly time frame, I believe, and we've been playing around in this one region for quite some time before finally breaking down to the 1382, which coincides with the smaller retrace too. All right, let's throw on our oscillators and get into the charts. What are the oscillators? The links are in the description. If you're not already into the Discord idea, this is momentummaster.info. Scroll down to features, toggle the entire toggle switch to see what it looks like, and take a look at each component at your leisure. So right now we're at the bottom of the Keltner channel. This is a 15-hour time frame. I don't know why I chose that. Let's start our descent into the lower time frames from the weekly. The weekly closes in conjunction with the 3-day tomorrow. So please take a note at how that is going to occur. We had this hard rejection off the baseline at the 27,375 region. And in order to maintain any type of narrative that negates this cross down event at the top, which had you at hello on May 1st, this impulse, this reversal of the baselines has this potential suppression to continue until you can start to reclaim some of this baseline idea on the weekly time frame. The cloud is showing signs of volumetric increase as we go lower. This is showing a potential sign of reversal at some point, a order block being hit, if you will. So if you go to the oscillators, you can see that we have reset a lot of the stochastic here. The money flow and the RSI are in an equal position. The Williams is in the potential reset mode, you do get into these positions where it does come down and could potentially curve up before continuing for more. So it doesn't always mean you immediately reset, but it is something to note. In similar fashion, you could just continue lower. All right, so let's go into the 5-day and lower 5-day time frame. 5-day, getting to that point, you have 4 days nearly before that to reset. Everything is in a reset manner except the Williams, also suggesting the similar thing. You could have a curve up, multiple top idea. You are coming down on the Williams. That could suppress your stochastic. All right, so if we go to the 3-day, 3-day is the thing I was looking at. We have a day for that. This is your sleeper idea. You have the money flow extremely beneath the RSI, which means it could come up to it at some point with fury, and you are getting low on the Williams in the green zone of oversold. So when you start getting into these oversold regions and the average also comes down with it, you get that cross up rising sun potential on the 3-day, possibly coming into fruition at some stage. Also, one thing to note here on the 3-day time frame is you have the 200 weighted moving average coming beneath the price as an SR flip potential, and the cloud also thickening at an angle here that we are wicking off of. So these are two bullish sentiments that I am seeing on the 3-day time frame. And fourth is a maintaining of this super trend. So if we can hold this 25-2 region on the 3-day and weekly candle close, this could still spell some bullish narrative for the week to come. Okay, so this weekly candle close is going to be a doozy one way or the other. If we start to look at the daily time frame, you have the 200 weighted moving average coming beneath the price and closing daily candles above it. We are creating wicks beneath it, but until the daily candle closes, this doesn't mean anything, just like this wick didn't mean anything until it closed above it. So what happened when we did that before? We closed above it and boom, we were gone. So this 200 weighted moving average is what I'm looking at for on the daily as a potential also bullish narrative for the daily time frame. You have the stochastic RSI could still come down here, and the Williams as well. It's not in the ideal position, but the 3-day in some way, shape, or form is. So the 3-day could be your subtle character with the money flow. The money flow is coming beneath the RSI here, which can suggest that it comes up some more. Ideally, you'd want to see this separation be greater in the similar 3-day fashion, in which case it comes back to the RSI. This is just something I noticed, that why I overlay them. The money flow and the RSI kind of interact in deviating from one another, and conversely, getting bearish divergence and deviating here, you come back down. Okay, so daily time frame looking decent with this closing on the 200 weighted. The bearish scenario is you're starting to get the cross down event. We previously had a cross down that happened here that got negated by this candle here, but we've only continued that narrative of the cross down. How do I know it has actually crossed? Well, we have a helix here. So the helix crossed down right there and printed over this candle on the daily time frame. So unless you're going to do something in similar fashion to this candle, this bullish engulfing, there's this cross down event on the daily could spell more downside in a similar way. It crossed up and it crossed down. You do have fake outs occasionally on the cross down crossover events. They are not to be ignored though. Even in this manner, they did come up. So if this is coming down, if you go up and maintain this without crossing it back up again, then you could be spelling more downside into these 1618 and below regions. Going to the 22, let's see how our treasure 22 reset itself. Kind of meandering around ambiguously. Hasn't been as accurate as in times past, but you are getting this in a lower level. Could still come down on the Williams a little bit more, as well as the stochastic. So this is setting you up for how it will close the week. Nothing to glean from this Sunday, June 11th. Let's start to make our descent to the 12-hour time frame. Let me see if there's anything we can glean off of the oscillators on the cloud. Hello? What do you want, buddy? Hi. You want to say hi? You want to come here? No? You're shy? See you later. Alright, so the 22-hour cloud, let's see how that looks. Still kind of thick. Angle is turning ever so slightly at this time, not facing down, starting to curve up. This is what we like to try to preempt. We are preempting this move by the curvature of the cloud here, and could preempt this coming in. So that's what we're attempting to glean off of the cloud idea. 22-hour cloud is a little bit choppy, but it is curving in a manner here, so suggesting that there could be a bounce to the upside on this time frame. If we go to the 12-hour time frame, also the curvature is starting to appear here, and it's thinner than before. You had a previously thick cloud here, thicker, getting thinner, getting even thinner. So this curvature of the 12-hour on this volume weighted cloud, what is that? Well, this is the trend cloud, a volume weighted cloud formula which expands and thins according to the amount of volume present in the asset. It uses a Heikin Ashi strategy as well for those outskirts of the cloud, which is this mist that it gets involved with. Alright, so this is where we saw this 6-hour cloud and it got rejected off of it. Here, the 6-hour cloud was starting to do the same thing with it thinning, and then now it's thickened back up again. So this fake out of a potential shift was rejected. We could not close a candle above it. We talked about not being able to get above that 236. If you cannot and you get rejected here, this is the short that play at work, and it was a doozy of a play. So I'm not really liking this cloud idea anymore, so I'm going to erase it. But the curvature of it is still noteworthy in this manner. It just puts you out in a further point in time. But the thickness is not a static idea here, but the angle of the curvature here is also suggestive of a change. We did have a close of the 6-hour candle with a buyback wick, despite all the games they played. If you do in the direction it moved, and you see the 382, if it closes the body above the 382, that is objectively bullish on the 6-hour time frame for that candle close. It's also trying to maintain this baseline. You did have a cross down event there too, so you're starting to see this cross down narrative playing out. There's a lot of cross out fake outs here on these time frames. Fake out, so fake out. Here's the real play, but here's the real play. So you have to honor them as they appear, so you do have a current cross down event to contend with. Although you are contending nicely by holding the baselines. The baselines are staying stuck together in a manner which is not implying one direction or the other. When they separate like this, it's harder to negate until the price gets beneath them. So this is what we look for on the baselines. We say when price action rests on or above these and the baselines begin to cross, upside begins. Conversely, as the price action closes beneath these and begin to cross, downside begins. This formula is expressing the first sign of fatigue across all time frames. So you want to see the cloud, this candle start to find these as support if you're going to see upside. If it continually gets rejected off of these, then this means the cross down is still in play. Okay, it's kind of like a dynamic support and resistance idea. So you are getting the oversold status starting to play out here on the 6-hour time frame in conjunction with the 4-hour. 4-hour also oversold, also cupping the baselines in a manner which could negate this almost immediately in a similar fashion here. So the 4-hour and the 6-hour holding the baselines with the potential of crossing back up at some point in the future. One thing on the bearish side of things with the hourly is you're getting bearish divergence, which played out or started to play out on the hourly time frame with the money flow coming down. It was hidden bearish that's starting to come down on the money, and also this cloud. The cloud is quite thick, so that's why you're getting a rejection off the cloud. When you have this thick cloud, you generally get rejected off it to start to fizzle out the angle of things. And so either you see the angles kind of coming down here, it is getting thinner than it was back here, but unless you can pierce above it and start to reclaim it, the thinning of this cloud is not yet underway. You want to see something in a similar fashion as you did here. Now this only gave you what percent is it? This only gave you like 1%, but still noteworthy nonetheless. If you can reclaim the cloud and start to thin it, you start to see these pushes in that direction. And conversely, if you see the thinning on the other side, where let's just invert it to be clear, if you see the inversion on the other side and you break through the cloud, you come back, you kiss it, it's thinning, then that's your entry for the short, the bearish retest, boom, from the cloud. So the cloud does have you at hello, so it's worth monitoring alongside the baselines. The baselines give you a good entry, and the clouds give you a good monitor for the trade. So you still have the hourly cross up intact. We are holding the baselines on the hourly time frame. The hourly is getting overbought on the money, on the stochastic, but you could see this play up some more as it pushes through the cloud. The liquidity on the 1 minute does suggest you go to those pools we outlined in the beginning to the upside, at least to the top of the range of 26,443. So 26,443 and their partner in crime over here, 26,445. Let's just go ahead and throw that on there. I think we can remove this now. 26,443. There we go. So about here is where the liquidity pools lie on this 1 minute up to the top here, this entire caked up region. If you go even higher, you do have this entire region up here at 26,964 at the 27K region. 26,964 would put you up at there. So are you going to see the top of this area reclaimed? So I'd be surprised if we don't at least come up to here to reclaim some of these short pools that have been stacking with these pings to the upside, or the pings to the downside rather, trapping them. So they're currently underwater too, so coming up to grab these characters is not out of the question. You have less noodles, quote unquote, interest. There's more soup broth over here, so the slurp coming up to this noodle area zone up here at 26,447 would be the idea. So it could play out and go sideways while the cloud kind of thins out and shifts and meanders around for it to stab up at some point while it pings more liquidity in similar fashion. You see this cloud getting rejected, thinning out, then surging through. Now it's trying to reclaim the cloud on the 15, suggesting that we're going to continue higher to this region if we hold this zone. So the 15 is starting to see a play here, potentially speaking, in conjunction with that cloud. You are getting the cross down event, which is something to note. Cloud also shifting, suggesting there's no volume stepping up to the plate just yet on the Asian session. So we could see the sideways play out until the... But overall, I would be counting on upside. This looks like an interesting diamond idea too. You have you could just come out of here essentially. Okay. My hand's falling asleep. That's weird. So let's see how everyone's doing here. Hey, Rocky, what's going on? APV, what's going on? Shout out to everyone here. So the thickness of the hourly cloud is where we saw that initial rejection, but we're still maintaining this baseline idea here on the hourly time frame. The overbought status and the bearish divergence on the money flow is what we're waiting to chill out. At least this money flow coming back to the 50 level, hanging out here and deciding what to ambiguously do to double top this or see this to fruition. The MACD, the leading MACD, is still healthy, as is the Williams and the Rising Sun event for upside. So you have to break through this cloud and the angle here for it to play out. But I would be surprised if we do not make our way back up into at least this range to take out some of these shorts they left in play. This is a large amount to leave just hanging out there, and there's nothing down below, at least in the interim, to warrant going down just yet. So going up, taking them out before going down would be the more reasonable thing to think. And they stopped out the initial longs that were trying to grab that play. You still have some longs that are existent here. We did talk about that 25656 guy. They did not come back to get them just yet, surprisingly. And same here with this partner in crime down here at 25387. But the noodles are separated, and there's more interest just above here at $194 million at 2593. So this entire region just looks more interesting to me. If I were a market maker, I would grab this. And that's my story, and I'm sticking to it. Let's go to the total market cap real quick and take a look at what we put out a while ago. I don't even remember the last time we looked at total. It had to have been at least a week or so ago, but I remember putting this out, the same bearish level, and we did go down to this 1382, almost at $1 trillion, and we're wicking off $1 trillion. Hi there, you want to come say hi? What happened? What's up, buckaroo? Ugh, you're getting heavy. You want to say hi? You're on the camera. You want to say what's up? Chong pong. Say hi. That's you. You're on the YouTube. What? Right? That's my son. His name's Ren. It means lotus flower, because he was born in the swamp of the coronavirus time. So he is a beautiful flower, a fire flower that was born in the swamp of that global pandemic. What's up, kiddo? You happy now? You got your Snoopy shirt on? You want a Snoopy? Say bye. Say see you. All right. Ooh, sorry about that, family. All right, so the crypto market cap is trying to see some sort of recovery zone of this 1382 region. We did hit this, so I'm going to delete it to make it clearer. So as the Binance FUD continues and the Gary Gensler SEC stuff with Binance unfolds, I'm convinced that they're going to be buying back. Like, you're seeing more of a downside for the Total 3, the altcoins are seeing more of a bleed out with Matic, ADA, and BNB with their delisting on Robinhood and stuff like that. So you're seeing more of a bleed out with the altcoins now than Bitcoin. Are these companies, these exchanges, are they going to start putting their money into the Bitcoin asset? Because Bitcoin is holding relatively strong compared to a lot of these coins. So are they going to buy up these as they try to hedge their portfolios as exchanges? They can no longer hold BNB, for example. They wanted to confiscate, I believe, the BNB of Binance or something. I don't know exactly the news in a nutshell. They wanted to confiscate it, but you see this straight sell-off of BNB. Where are they putting the assets of that BNB? So that led me to believe that with this buyback, they're buying back their value in BTC. I was looking at the BNB BTC pair, and this was interesting because it was straight downside. So they were selling off their BNB into BTC, selling off into BTC, selling off into BTC. So they're selling off BNB into BTC, just straight downside into BTC. As we drop in BTC2, they're happy to take it into BTC. So these kind of bounces, these are establishing positions in BTC for what exactly? Or if BTC is going down, why would you establish that position? Yes, they did short squeeze some shorts, but is that the only reason? It is all about liquidity, but it's also about protecting the exchanges, trying to protect their liquidity, as we saw with Luna and FTX to collapse. Is this another attack by the SEC to try to collapse a giant? And are they trying to create a surge to kind of stave that off and keep their portfolio looking hot? Just a little idea percolating on the back burner in my mind, but it's all just speculation in the end. Okay, so yes, in the interesting bullish scenario, if you come up and you reclaim this and you start closing up 4-hour candles as if this never occurred, and this starts to cross up again, then we can start seeing narratives up into this region. If not, you know where the pools lie down below. We have that 24K region. We have a local impulse bounce potential at 23.9. If you come down to that region, you could bounce off the 23.9K. As it stands at this exact moment in time, do I see an area? Do I see an entry? I'm not really liking the levels here. I would like to see potentially some wickage for another entry zone, but if you had already taken that, congrats to you. If you took one of these levels here and are still holding after this shenanigan here. So yes, that's about it for me. So despite what I say sometimes on the live, the dynamic alert system with the 236, I was saying if you cannot get above that, then you're basically going to the downside. But if I just cut out everything and just looked at that only, that had the dynamic alert had you at hello, as did the alert on Monday telling you 7 time frames were overbought, and we basically dropped out from there, from this top over here. I think it was this one. Was it? No. Yeah, either way, like it had you at the top zone despite everything. Well, ladies and gents, I will keep you updated in the group. I think that's it for me for today on this nice Sunday. Please enjoy time with your family. We are probably going to come up to this region, as I said. I'm not going to draw any lines to it, but you know where the pools lie, up to the 26963 and 26443 region. I'd be surprised if we don't at least make it up to the top to ping out that liquidity and gobble it up. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will catch you on the flip side.